Let's start part 2, UAE's construction boom, concrete. This 120 metered in blocks, offering 22 to 22.8% 4 years.
Now, if now the same as I mentioned to you, we need to analyze in the different angles by incorporating some more information. But definitely, I will repeat the same process for the ready mix concrete manufacturing, but definitely it will incorporate some more factors as well. Fine. So now let's talk about the ready mix concrete manufacturing. Fine. As I mentioned, definitely what would be the important products we need to see. Okay, so you can see over here, ready mix concrete. Okay, concrete blocks, special concrete mix. Fine. Project overview. Okay, you can see over here. Fine. So this would be the ready mix concrete manufacturing plant, UE industrial zone. Okay, location, what would be? It means this is, we are assuming this is the project overview. So plant capacity, before that it was 100, now it's a 120. Land requirement 12-20,000 square meter, and investment is requiring 15 to 18. Now just see that if we will do this one, so overall what would be the stats or the things we need or require. Okay, if I will make it a little bit squeeze so that at least you can see all the information on in one go. So expected revenue 18 to 25 million. ROI so would be 22 to 18%, and payback is 3 to 4 years. These are the stats for the project. Let's break it down. Fine. Okay, so market analysis, as I mentioned to you, that the construction sector is valued, you can say $133 billion. Okay, so very high demand of this sector. Fine. Sometime my cursor is not working. Sorry for that. Okay, so sometime it's working. Let me, okay, so highlight this one. Mega infrastructure projects, as I mentioned, then the residential development, tourism and hospitality expansion, government smart city initiatives. So these would be, construction industry stats that in which area you can work and it's growing and flourishing. Major construction projects, fine. And Palm Jubilee, fine. Palm Jubilee, you can see over here. So Palm Jubilee, Dubai South, Ittihad Rail, Saadiyat Island Development, and Neom supply chain demand. Saudi, if you have the expansion. So concrete consumption in UAE exceed 25 million cubic meters annually. This is the start. Demand for ready mix concrete. Okay, so you can see over here. Okay. Concrete demand drivers, residential tower, infrastructure projects, road and bridge construction, industrial development, and commercial real estate. Average concrete consumption per project that I can tell you. Okay. So this is the, the stats. Okay. So you can see over here. If I will, 1 minute. So I need to scroll it down because due to my cursor selection, it's went up. Fine. Now we are going down by slowly. Okay. So yes. So aggregate average concrete consumption per project. So residential tower, how much it requires normally? 20,000. Okay, so 20,000 to 60,000 metric. Okay, so you can see over here, and you can see this one. A shopping mall 33,000 metric per ton. Okay, road infrastructure 5,000 to 40. Fine. If we talk about the competitor analysis, fine, you can see major ready mix companies are these are the major ready mix. Unibeton, Quick Mix, Conmix, Emirates Beton, Abu Dhabi projects. If we see the competitive advantage strategy, a new plant can compete through how it will be. What are the important factors? Means USP you can have, and then the business you can compete in the market, and you could be the next one. Okay, faster delivery, competitive pricing, strategic plant location, specialized concrete mixes, or strong competitor contractor relationships. Fine. Location selection, ideal location, what would be? So ideal location, it means, okay, what would be advantage and what should be the location? Fine. Okay, so Dubai Industrial City, okay, near major projects, then the Jebel Ali Industrial Area, Logistic Hub, Sharjah Industrial Area, lower cost, or a rack industrial zone, export potential. Means what advantage you can get from this one. Abu Dhabi ICAD, it means infrastructure demand. Land requirement for this project, you should have 20 to 12 to 20,000 square meter, includes what would be batching plant. Okay, so batching plant you can see over here. Okay, batching plant, average aggregate storage, okay, cement, soil loss, vehicle parking, laboratory, and the admin office and the laboratory. Fine. So these are the land requirement which you need to consider while preparing the feasibility study of the concrete ready mix concrete manufacturing company. Technical feasibility, concrete production steps. So first of all, you need to get the raw material storage, then aggregate batching, cement mixing, water and chemical admixture, automated mixing. Okay, so quality testing, delivery via transit mixer. That's normal. Fine. Plant capacity, okay, if you'll talk about the plant capacity, so as we have mentioned in the beginning, 120 metric ton per hour, okay, production capacity. Okay, so hourly it's a 120, then daily is a 960, monthly is 25,000, and annually is 180,000. So conservative utilization, 30% capacity in the first year because you are a net new setup, and then eventually it will grow 40, 50, 60, and eventually until 5 year, it could be 70 to 80%, depends, but depend. Production, you have, the 50,000 metric annually for you equal to that 30%. Fine. I think so. 180, yeah. 180,000, so it means it would be 30,000, 30%. So that would be equal to 54,000. Machinery and equipment, main equipment and estimated cost. Concrete batching plant, how much it will cost you? Okay, for the initial investment, fine, but it's very low. Nice. Okay, so 2.5 million, then the cement soil loss 700,000, 600, 400, 300. Fine. 4.5 million. This is the initial investment in and as well as on the vehicle as well. Okay. So 3.6 million for the six, the mixer, transit mixer trucks, concrete pumps trucks, and the wheel loaders too. So total it would be 6.4 million. Fine. So now we'll talk about the human resource plan, human resource cost. As you can see, the plant manager one requires 25,000 salary per month. Okay, so the number of the staff and the monthly staff as well. Fine, and you can see over here. 1 minute. Sorry for that. Accept my apology. Okay, so engineers. Okay, so 15,000. And likewise, the lab technician, operators, drivers, sales team, and admin, and the total staff would be 24. Annual payroll, it would be 2.1 million. Initial investment, how much it would be? Okay, that would be the land and land lease and preparation 2.5, batching plant, machinery, vehicles, office laboratory licensing, and the working capital 17.3 million. And revenue model would be now we have increased. Before that it was, I think so, 280 million, 280 dirham per metric cubic metric, per cubic metric. Fine. So now it's become 320. Okay. So definitely the revenue will be increased. Okay. It would be 19.2 million. Fine. Annual revenue. Operating cost would be, you can see operating cost, fine, 1 minute. Operating cost would be 8 million, staff salaries 2.1 million, fuel and logistic 9 million, 1.8 million, maintenance, utilities, admin and marketing. So total OPEX would be 14 million. Okay. Profitability would be 19 minus 14 equal to 5.2 million, which is equal to 27%. That's a good profit. Okay, ROI, it's a good, because if it would be 15, in between 15 20, it's as per the market terms, it's a good profit, but it is more than this one. Fine. If we'll talk about the 5-year financial projection, you can see as we have estimated for the first year, the revenue and the profit. You can see, let me break down for you. 1 minute. 1 minute, yes. So this one is the, you can say this is the profit. This one you can see, this one is the, so this one, year 1, year 2, year 3, year 4, 5, revenue and profit split up. Okay, so this is a 5-year projection, how it will move on. Financial indicator, if you put 17 million in the project, 5 million would be the average profit, ROI 28%, payback 3.2, so the IRR would be 30%. So it means if the IRR is greater, okay, then the cost of the investment, for sure the project would be viable. Licensing requirement, you can see over here, the, as I mentioned, industrial license, municipality, environmental, civil defense, ISO quality certification, risk analysis. Already me have mentioned that the construction slowdown, diversify the project you can do. Okay, raw material price fluctuation, long-term supply contract, competition. It means what are the risks and what are the challenges you need to think, so that you can mitigate the risk. Fuel cost, efficient logistic, and the competition, competitive advantage. So conclusion, the ready mix concrete manufacturing projects in UAE is financially viable due to strong construction demand. Key highlights: investment is required 15 to 18, expected revenue 1925, net profit 4 to 75, or payback 3 to 4. This is the overall stats. Fine. Now further you can see, if you want to explore in Arabic, probably you will get the little bit detail, but not the complete one, because in English language it has been given the complete detail, but in Arabic it has overall summary is okay, but it's not the detail. You can see. Fine. Because I'm scrolling it little bit fast, so that you can see the complete detail. Fine. So you can see over here, this is the Arabic version of the concrete mix feasibility study. Fine. Probably you will get the better idea. Fine. So that's it. Okay. Thanks for watching the concrete mix, manufacturing company, or ready mix concrete manufacturing company. I showed you that how the things would be and how it would be separated, what would be the component. This is overall. Fine. But hopefully I will show you, the feasibility study, how it will look like. Fine. Let me show you the sample as well. Fine. So in that way, you will get the better idea that if you will approach to us, so how I will prepare this one. Fine. 1 minute, 1 minute, 1 minute, 1 minute. Okay. Now let me show you the sample report. If you'll prepare the feasibility study, then how it will look like. So in that way, you would have the idea. 1 minute, let me open for you. Yes, now you can see a big view, okay, of the feasibility study. And normally, once you prepare, this is a table of content, okay, disclaimer, okay, and basically this is the pediatric hospital feasibility study, but I'm just giving you the idea, fine. Then how it will look like, because whenever you will receive, what would be the format of the report and how we will incorporate things. We will mention the source link that from where we pulled out the data. In that way, you will have the more credibility that from our side we will not put any information. So that is the project of 100 million. Okay, so you can see this is stats. Okay, so how on executive level we will mention the things, the NPV, IRR, and viability of the project. Then our recommendation and conclusion as well, it would be the part risk analysis. We will also give the recommendation and conclusion as well. So you can see over here this one, fine. You can see this one. Okay, so this is the industry and market analysis from top down. Okay, global, then GCC, then UAE, fine, then the the Dubai or Abu Dhabi, which emirate do you want? And we will mention all the information sources with the links. That would not be from our side. Country level analysis, you can see over here, and the industry level analysis, fine. Business model, what are the business model of the client? Okay, SWOT analysis. Okay, so you can see competitive analysis, you can see over here, and likewise sales and marketing strategies. Okay, what would be, and the critical success factor which will make this business or the project successful, risk and mitigation as well. Fine. Financial plan, as I mentioned, then this is staff cost. You can see over here how many people, what would be the staff cost, visa cost. You can see over here. This is the capex and opex detail. Okay, so number of the staff, how many people should be in a per year basis. So this is the detailed feasibility study you can see over here, and it will give you the idea, complete idea that how the things will move on. Fine. Hopefully, it will give you the complete picture of the project, okay, with the, all the detail. So general key assumption, the industry growth rate and inflation factor we need to incorporate in the feasibility, and the references source we will mention. That's it. So you can contact us on this mobile number and we will help you out. Fine. So thanks for watching this feasibility study and all these things. So hopefully it will help you most and will give you a very high level, high quality report, even though for the banks or any government or regulatory authority as well. Thank you. Thank you very much.
In the next video, we'll discuss the gym feasibility study, covering investment, operations for setting up a gym business. Stay tuned, and don't forget to subscribe.